Hello there, fellow traders. Welcome back to impatienttrader.blogspot.com. This is Trader Stewie here with you guys again. Well, it's been 48 hours since I made the last video. I just wanted to kind of just go through the charts one more time and just see how much progress we've made since my last video. All right, let's get to the charts right away. Here's an update on my blog. Inverse ETFs. These are the ETFs, the micro charts that I put up 2 days ago. The 30-minute charts. So yeah, let's just go back and take a look at here. This is a chart of the VIX. As you can see here, it peaked out at $77 and came crashing down. It took a huge hit yesterday with that market bounce we saw yesterday. You can see what's happening here. It pulled back. It pulled back dead on the rising 20-day moving average. This would be a holy grail setup. Anybody who's familiar with those, it's pullbacks to the 20-day moving average. You call the holy grail setup. It's a trade that I love to trade them. One of my favorite trades out there. So you can see here we have a little doji here sitting right on the 20-day. So maybe one more spike up in the VIX could be in order tomorrow, perhaps. We'll definitely have to watch that and see what happens tomorrow or the rest of the week. Let's go back here. Take a look at this. Is the VIXN. This is the volatility index for the Nasdaq. It's a chart I put up a couple of days ago, and you can see here what's happening. We pulled back quite a bit since my last video I put up for you guys. But you can see what's happening here. We're starting to see this falling wedge pattern here. We saw it earlier in the month in October, and you can see here sitting right on support. Right around that 57, 58 area, and you can see it's wedging nicely, and we could see some strength in the thing tomorrow. So, which means we could see the market fall tomorrow. So we'll see. Definitely a chart keep an eye on. And let's take a look here. This is the Dow Industrial Average. This is a chart of Dow Industrial Average. You can see here, even with yesterday's big bounce over here, you can see that we barely made any progress at all on this chart. I mean, you can see we're still stuck in this wedge, into this flag pattern here, this pennant, to be more precise, a flag pennant type formation here. And you can see here typical on the RSI, typical bear market action where usually the RSI stays below 50. Any spikes in the RSI are usually contained by that 50 mark here. So that tells you that this market is weak, and probably I would suspect any further tests of 50 would probably get rejected there one more time. We might not even make it this high this time around. We'll see. So you can see here today's bar right here, a narrow range bar, NR7. So I'm expecting expansion out of this range. And like I've been telling you guys, I'm really expecting this market to head lower here soon. It's going to roll over probably somewhere around these levels here. Probably just, might spike here tomorrow, or might be just a slow roller out of this pattern down. Let's see here. This is the TWM, which is the Pro Funds Ultra Short Russell 2000 Index, and you can see here this is a 30-minute chart. We're wedging nicely here. The noose is tightening. I like to call these. You can see here it's getting narrower and narrower in this wedge, and a breakout looks highly likely here very soon. The MACD here, you can see it's getting very, very tight. So expansion here, expect expansion here. And this pattern to me it's the more I look at this, the more bullish I get on this pattern, or bearish on the Russell 2000. Let's go back here, take a look at this is the QID, which is the Pro Short Ultra Short triple Qs. You can see here, same thing. The noose is tightening here in this wedge, looking more and more bullish. We had here, this is the prevailing trend, which is up, and you have here just a nice, beautiful tightening formation. Volume patterns here are very bullish for this setup. MACD here, you can see it's getting tighter and tighter and tighter, and I expect upside explosion from here. That's what I'm expecting. So we'll see how it looks tomorrow. And here's the SKF, which is the Ultra Short Financials Index, an index I love to trade. You can see here the beautiful looking bullish pattern here. Here's the prevailing trend. Pulls back nicely. and a nice, beautiful, mellow pullback here into this consolidation, and looks like upside breakout looks highly likely here. MACD, look at this MACD action. That's beautiful. You see how it's consolidating right here, moving sideways and ready to expand. Ready to expand higher, in my opinion. So, and here's the DXD, which is the ultra short Dow Jones Industrials. You can see here, same story here. Beautiful rally here, and then it would into a huge consolidation. I mean, the bigger the consolidation, once the breakout happens, the more meaningful and the stronger the breakout's going to be. And you can see here RSI, you have a higher lows on the RSI as this pattern is consolidating. You can same thing with here as the pattern is consolidating, moving sideways. You have the MACD making higher lows, and here RSI making higher lows, and looks like a breakout here. Looks in the coming days very likely. One more chart for you guys. This is the SPX S&P 500 index. You can see here. Here's how much we've moved since the last video. Since the last video, it was right here. We had that doji. We had one rally yesterday. We gave it all back today, and you can see it's a narrow range, it's an inside bar. So I'm expecting a move in the prevailing trend, which is lower. So a break of these lows, maybe tomorrow, maybe later on this week. You know, it just looks so bearish. You know, I can't be bullish here. You know, just looking at this pattern right here, everything tells me to remain patient, stay bearish. And take a look here. This is people don't really understand this pattern when I explain it to them. Take a look what's happening here with the MACD. You can see here you have this is the slow line, and this is the fast line. And you can see what's happening here is that the slow line is starting to kiss the fast line from underneath. This is, I'll take it back. This is the slow line. This is the fast line, I think. Well, I'm not sure if I got it mixed up. Anyway, you can see here what's happening is that they're starting to come together. But if they break higher, then you can argue that we could see a little bit more strength. But if we stay weak and this black line here stays below the blue line, then I'm telling you, we're gonna go into a very, very long downtrend. So tomorrow and the next couple of days is gonna be very key for the MACD index right here, I think, because if we start to peel away and start to head lower here, then I think this downtrend is gonna catch people by surprise. This downturn could last a long time. You know, so definitely need to watch the MACD over the next few days. And here's a chart I put up. This is exactly what to me the rallies have been looking like lately. Just flat. You know, there's just no bouncing. Like a ball, you throw a ball on the ground and it just doesn't bounce. It just sits there like a flat ball. And this is what the rallies have been looking like. And to me, that in my experience, that has never ever been bullish. You know, when a market's being so oversold, yet you can't find buying, you can't find any sponsorship, you can't find the buyers are not aggressive. I mean, this is basically an invitation for the bears to come in and steal the party, steal the show. So, anyway, guys, this is the video update. Hope you guys liked it. I'll do one more before the week is out, just to update on what the charts look like. But to me, I can't be bullish here. You know, the more I look at these charts, the more bearish I get. So anyway, guys, good luck trading tomorrow, and talk to you soon. Bye bye.